Yeah. All right. Okay, I believe we are streaming. So welcome everybody. Let me just double check. Yeah. So okay. So yeah, welcome everybody to the Bookmap um, Academy meeting, and we do this every Thursday. There might be some new people in here, so just go through just the basics here. It's a little different today. It's kind of a follow up. The competition is still going on. If you haven't heard of it or partaken in it, here it is here at competition.bookmap.com. And it's just rounding out in a few more hours here. So heck, if you guys see a good opportunity, grab it, and we'll go even through live trades if you like, and share your screen. But anyway, look at the leaderboard in here. Oh, let me go down to okay. Pretty crazy stuff in here. Vava's got 1.7 million.
Beautiful.
Yeah, yeah, and Submarine Scalper, look at 38,000 trades, transactions. So that's quite a bit. Clearly, either like the guy doesn't sleep or he's got a bunch of algos working for him.
ETFT.
Yeah, yeah. And then some of the other guys in here looks like some more kind of buy and hold, looking for some bigger positions here, and doing really well, longer term players. So anyway, if you guys are interested if you're new in here, you're welcome to the room. Let me just show you a little bit about the program. If you haven't heard about it, go to bookmap.com, click on the more button here, and then go to Bookmap Academy under community, and you can read all about it here. It's pretty simple and straightforward plan. You create content and mark up your charts in Bookmap, and we will go over them in this meeting, and also in you create it in a spreadsheet, and you also post it in our Discord channel to create the community, get feedback, and we're happy to do it. And then we open the mic for you here. Walk us through your trades, what you were thinking. We're here to listen and give you input and advice. If you do well, you can be invited. First, what you do is you apply to the academy here, and you'll be applying to the junior academy. And if you do well and you kind of capture our attention, you will be invited to the junior academy. And then that's where your proving ground begins. Like start meeting the quota of at least one piece of content per day. And then we're looking for quality from our teachings. And if it meets and passes those thresholds, you will be invited to the Bookmap Academy. And here you can get Bookmap for free. You continue doing the same thing, meeting the thresholds, and we'll even give you the MBO bundle. Or I'm sorry, it's not the MBO bundle anymore. It's just going to be stops and icebergs. We split up the MBO bundle. If you do well there, you'll be invited to become a coach. And then that's when you start to give back to the junior academy or the applicants. And you can make it up into being a streamer for the Bookmap team as well. Anyway, our agenda is that was the introduction. News and updates here. Lots actually to go through, and then we'll get to your content. So yeah, you've seen the competition here. I just covered that. General disclosure, all Bookmap limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. All right, well, we gave a lot of free things away as well for this competition. So I'm not sure if you guys have taken advantage of that. Let me just show you something here that we are giving away. And that was through this Market Pulse too. Now, this is the Market Pulse web tool. It's free, and you can see that. Well, if I log in here, let's see. Okay, yeah, markets are closed. Yeah, it only works during market hours. That's a pity. Not to show after hours, but you can look at the indexes here or the Mag 7 stocks, and this is all real time. So you're going to look at an aggregate from those 7 stocks, and that can be really helpful for giving you some insight to where price might go in terms of correlations. Okay, looking at your bellwether stocks. There's the 24/7 simulator. There's also the I wanted to show you this as well. The just a minute, bringing up the trading journal. It should have been connected to your account. It might not have been, but you can look at it here. Here's mine from the competition. It's actually a little off because it should be about 10 grand more or so. It's a little off because I didn't have it connected when I started to trade one of the instruments. But you can see every little trade is, here's 1 lots, here's 10 lots, we go into some of these others, here's 30 lots, 100 lots, etc. So, it's all under one journal here, competition. So if you want that, if you want to look at all your journals, you can do that as well, and look at all of them. Anyway, I hope you use those tools. They're great, and they should be helpful for you, right? So anyway, welcome everybody. Thanks for coming and partaking in this competition. I just want to throw it out there, and anyone have any comments, anything that they want to mention here about the competition? How did it go? What did they think about it? And trading the size, having $1 million and being able to leverage that. Maybe it didn't change your trading much, or maybe it did. Would love to hear from you. So yeah, if you have some comments, want to raise your hand and chat. Else, we're going to jump right in and go into some of the content here. Oh God, I don't know. Let's think of a number between 1 and 10. Who's going to go first? So Stan, this time you choose the number.
8.
All right, David.
I'm going to go for 3. It was 7 last week I went for, didn't I?
Yeah, it was 10. So Stan, you go first.
Thanks. Excellent, Paddy. Well deserved. Well earned. And good evening, good morning, good afternoon, everyone.
Which one is yours, Stan? I think this is David's here. Got John.
I've got Rob. I've got Rob
Yeah,
Davis.
that's mine.
This one here is yours.
Yeah,
Okay.
Yeah, exactly.
Okay.
Yeah.
All right.
So yeah,
Okay.
I will go through Steven. So I don't know if he's here.
Yeah, he's here. So let's add him to the stage here. Welcome, Stephen. It's been a little while. We haven't covered you for a bit, so I'm glad to Stan's going over your stuff. Oh, it looks like he might have some problems here.
I will go through. So yeah, that was a trade like the 24 October. So that's great to have like the box with all the context and how the market were opening, like more macro view that we can see completely on the top with the date.
Up here?
No, just in the middle of yeah, exactly there above, like.
Oh, here. Okay.
Yeah, exactly.
Got you.
Yeah, exactly. So all about the context, then different view on a different screen with candle. So to see, yeah, the bigger view. I really like how I highlight all the key elements in the order flow and he was trying to, as he noticed, so trying to master the 1-2-3 pattern in confluence with other things. And I found really great like how he highlight the volume and by yeah the relative volume or the dots plus the exhaustion. I really found that's a great thing, and I don't know if you could maybe sort of a checklist from it, because it seems like you have something. So I don't know what's your feeling about it, and if you could give us more explanation.
Yeah, Stephen.
Hello.
Hello.
Hey.
How are you?
Me.
Hi, Stephen.
I'm okay. A little under the weather, but managing. Yeah. This was a interesting slide. Was I remember? I think it was Shark Blue. He he was sharing his 1-2-3 pattern, and yeah, it was interesting about the liquidity on the bird, like how well, firstly the checklist that you're talking about with the trend line and then the trend line break and then the lower highs. And then that's something that I usually mark up on my usual way of marking up my slides. Um, yeah, I just noticed it after his explanation on the academy meeting that he was explaining, and yeah, but also the webinars on the liquidity, on how institutional traders also view the liquidity. That also was the aha moment. And then obviously I just put my spin on it with my NinjaTrader tick charts for more context. And then I've got my little context there with so like I know how the market opened. And
Stephen, I'm sorry. So the one here on the left is which
yeah,
one, and then the one here on the right is which one? I think this is the maybe
I
a little bit
yeah,
lower time frame, right? Or
yeah, I'm not too sure myself right now. I need to have it open.
it looks like this refers to here. Let me get the
Could be it could
pen
be a
tool.
1,000 tick
Yeah.
chart or
This
the
one refers to
233 tick
this
chart.
one here. Yeah, yeah.
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 Okay.
So basically, the one on the left is from when the market opened,
Okay.
because I need that whole context, and then you can see. Well, move a little bit more left to the left. The slide. Yeah. Okay. Stop. So I can see that we had the IB30 and the IB levels. We did have a break below the IBL. I want to see on my notes. Oh, so if you look at my notes on the top with the date and everything, it says the AF break below IBL. So these are my little notes that I don't have a checklist. I am working on it, but I don't have it on my charts. But those are key little pieces that I'm noticing. And then usually the IB play, if it breaks below IBL, then you're looking for IBC, or pullback, and then or in this case we had a pullback more into like the retail, the VPOC, and then obviously buyers exhausted, and then we take a short, and you're looking for first target either at IBL or a prior level, or whichever comes first, the 5 point target one, that it depends how you play it. But anyways, more into order flow. You can clearly see we've got some buyers as it's going up, and it's still above the trend line, the ascending trend line.
Mhm.
And then towards the top, you see buyers exhaust. They can't take the offer. And then you still have that high liquidity at 58, 51, spot 50 that doesn't get traded into. Clear exhaustion, the break of the trend, break below, then the lower highs, and then you see sellers. Now, the reason why I mark this up, what I've noticed is like I always get in a little too early, and I don't wait for that conviction of when the sellers step on the gas. The reason why I also don't, I'm scared like I miss the move, because when you get the um the delta bars, especially the seller side, when it's clear like, okay, sellers are stepping on the gas, and then it kind of, it runs without you, and then you're hoping and praying that it comes back to test the micro high volume node above, where it found resistance and then sold off, which is what, 58.50. So in this case, it didn't do that. Well, I don't know. I don't know what the context is, because I just got this one slide. But does that make sense? Is anything else that you need me to elaborate? And then, of course, you see the sellers trading into the liquidity on the bid. Oh, well,
This
you can
one
see they
here.
pulled as well. Yeah, I
Yeah.
noted that.
Yeah.
Sometimes they don't pull, and sometimes they do. And I'm not too sure still how that fits in with my process and what it means. But clearly, no one wanted to trade there, but there was at the lower end at 44. It did get traded into. Yeah, it's and these liquidity webinars with the institutional traders, it's been quite eye-opening, and also the comp as well. So thanks for putting that up.
Yeah, sure. Stan, any?
Yeah, no, I found very great what you were highlighting, and hopefully you will create for us a checklist, and you will try to.
Yeah, that will come eventually.
Yeah.
I do have a question though.
Yeah.
So I just mentioned now that like the FOMO, well, not the FOMO, but like, that, yeah, it is FOMO, fear of missing out.
Mhm.
So do you guys have an approach or how to handle, like, normally we want some sellers to step in, and then we want to pull back into that high volume, and then holds its resistance, and then you get short. If that makes sense how I'm explaining it, how do you handle missing it? Like an aggressive entry would be putting a sell stop at 58.49, and then as the
Yeah.
sellers get in, then you in. Does that make sense? What I'm asking, like, how do you
Yeah, it
handle?
does.
Yeah, like like the fear of missing out, getting into the short, because you can see clearly it did not come back.
No, it didn't. It didn't. It didn't. And good to catch up, Stephen. Apologies to you while I got the mic and others, because I know a few of you pinged me some stuff to look at this week, and my week's just gone sideways. So I will come back to you guys. To that specific question, if I was in this position here, let's say, and we're getting to 11.18, those classic lower highs or higher lows, whichever end of the chart we're looking at, so to speak, those, as I'm going to pick on John or swing into John when he's on the mic a bit later, those are such reliable patterns that I use day in, day out in terms of looking for, okay, we're going to reverse one way or the other. So I am then getting ready to enter, whether, and more likely than not on that one, that would have been a market entry. More than likely a market entry. And on the chart, a little bit out of vision, Bruce, if you go a little bit further up above the 58.50, you got that deep liquidity, as you mentioned, Stephen. But within that, there's a large lot trader. There's an LLT within that area here. But as the price starts to pull away, now I appreciate Monday morning quarterback, but as those lower highs are printed, that liquidity is starting to fade. So, who knows? The big trader in there, was it just a mere bullying tactic to try and push the price down, or were they generally looking for an exit and entry? Who knows? But either way, there is some noise within that. And so back to the original question, Stephen, for me, I'm seeing those lower highs, the price breaks out, and I'm very likely there would have been a market entry there and then. But I know I've said on several of these webbies that we do, where it's range and it's getting to a range, then as you suggested within the question, that could then be a market, that could be a stop entry, so to speak.
Yeah, well, that's my approach.
Yeah.
Gets me in at the best, like, highest price,
That's
Sometimes
it.
it'll get me in and then push higher, but
And you know where your stop can be, whether it's 58.51 or something, or boldly, it might be above that. It might be above 58.
52.50.
Yeah, exactly. You think, well, if it goes up there,
Yeah,
I'm
that's
buggered anyway. So, yeah.
yeah. Well, it has been a challenge. That's why I thought it'd be interesting to
It
bring that
it
up.
is. No, it is. And I've got Rob later, and I appreciate Rob hasn't yet spoken on his charts. But Rob, I say, like many of us, you have that little bit of hesitation. The price moves along a bit further. You're still hesitant, and then you get in, and you think, probably shouldn't have gone in then. I'm a bit late, or you leave it all together, and then the trade scoots away, and then you're just banging your head metaphorically on the table because you've missed out on what.
Yeah, and then you get triggered.
Then you get really triggered. Yeah.
And
Trigger with
then you want
Tourette's,
to miss
Bruce.
the next one, and then you have to miss the next one.
Yeah, it's a vicious
Oh my
cycle. So
God,
it's
trading.
yeah, there's no. If I'm trying to ramble on about it, it's just come from years sat at the screen. That's the thing of like, okay, I'm gonna roll the dice. I'm gonna muscle memory, reps and sets. Someone swings at me. I'm just gonna move my head. I'm gonna punch back. As a poor analogy, traders. Stick to the golf, David. Isn't that right, Bruce?
Bobbing and weaving.
Yeah. Jab, straight, hooks, the whole lot.
I don't know. I mean, like, there's some really great stuff in here, and I would just echo well, David's and especially Stan's comments about a checklist. That will help you with the fear of missing out. Like, you're looking for something specific. Now you know what you're looking for. And if it misses, then it misses. So, you'll have to kind of find, this sounds kind of lame, but you'll have to find something that works for you. Like here is this swing low. Here is where this structure breaks. I don't know. Do you want to put like halfway in, something, or do you want to put, an order up here? Even if you put your order here, a limit, I'm sure even if it touched it, I'm pretty sure you wouldn't have gotten filled. So it that's a part of trading. So
pros and cons.
yeah. I mean, like, and if it really bothers you, and it does, it bothers me. I struggle with it. I usually just do market sell or put a sell stop in there. And I would rather take a little bit of heat, and at least I'm in it. I just can't stand it when this happens. And this one, like you said, you don't stand a chance of getting in, because this is a really toxic move here. It's a larger player just moving it, and moving it away quickly, so it really can't come back. And you can see that was what happened on your higher time frame too. This is a beauty, right? Anyway, yeah, that's something to consider. Maybe play around with it. Maybe you get in half a position here, put half a position for a pullback, or something like that, and then you can get on a full position. So at least you find out what works for you, or maybe you just end up saying like, you know what, I missed it. C'est la vie. And that's that. Because if you're like selling down here at the bottom of this range, like there's a really good possibility you can come back up and hit into this 5150 liquidity up here. So I mean, God, that's where I just kick myself. Why am I always selling bottom of the range?
Yeah, I can relate.
And that's the fear of missing out. But this is, again, I think a checklist will help you.
Yeah. Well, that was the attempt on this markup, and this realization came after the liquidity webinars. Mark Boising, if I'm saying his surname properly. Oh, Marco, sorry. All the guys, I've been watching a bit of it, and it's making a lot more sense. It's weird, like how you just don't see it. Like it's important to go back over basics.
Yeah.
because like and I'm like, wow, why didn't I know that? But you also, you go over it all the time as well, the importance of order flow. So, but yeah, and then I learned from Shark Baloo's slides. So that's why
Perfect.
I pulled this up.
Yeah, yeah. I mean, this is pretty classic stuff. I mean, like David and I
Mhm.
always kind of say, it's Monday morning quarterbacking is really easy.
Is
Uh, but here's what you got: high liquidity, high liquidity, high liquidity.
Mm,
It's surprising it didn't get up here, but they're getting. We can see that this liquidity is, some of it is getting filled here on the bid.
mm,
I'm sorry, on the offer,
mm.
and then there, we can see underneath that
well,
there's a lot on the bid.
Yeah,
Typically, this is you see this so much at the end of moves, that and this is exactly the behavior is, kind of look like we want to buy, look like we want to buy, and then like if it doesn't hold, they're not going to buy it.
yeah,
And Now, if these were massive green dots, and maybe it just trickled down, and if it was a different kind of move, maybe these players would stay in the book and get filled.
mm,
But clearly, in this case, I don't know. I always think that there looks like a book skew to get price to come up into these areas here, and I don't know. It's around the figure here, so it can kind of like David saying, like kind of juke and jive back and forth here a lot. Um,
could you label it as like a classic spoof? They're trying to commit some buyers, and then they pulled last second,
mm, no,
catching the.
a spoof would be like, I mean, in my mind, like a spoof is when let's just clear all this, would be more along the lines of like if it's really high liquidity, like right in here, and then you'll see it flip. Well, that'd be a flip of the book, but then like you'll see like a wall in here of liquidity, and you're like, holy cow! Look at all those buyers. They really want to buy, and then they all pull at the same time as well. So I mean, this is kind of like that behavior, but it's a little bit longer term. Um, it's
Yeah.
a little different. I wouldn't consider it spoof, but they clearly didn't trade on the way down. So it's kind of spoof-like, maybe.
Okay.
That's my opinion.
Okay.
Yeah, yeah. So I'm curious. When you okay, so I mean I could see that. Let's see. Let's see. Where did you get in? Um, on this
He,
one.
ju- he just like
Oh, this
took
is
some
the
picture.
so this is the trader map lite,
Uh-uh.
and unfortunately, because I'm trading on MES, I can't show the entries, but I love the heat map. So I tried to show it here, but if you look at my NinjaTrader chart, you can see I got in on the high. I think I did catch the break. I'm
Here.
not too sure. I have to pull it up to double check. But yeah, maybe the zoomed in one you can check on the right.
Maybe
Yeah, it
here
looks
to
like I,
here.
I got it on that red candle. Yeah, the bottom writing is my exit.
Okay.
And I don't know if I got target 2 because yeah, I'm not too sure. I'll have to pull it up. It's hard to see. I'm trying to keep my slides compact and not
well
so
done.
many slides, so it's easy to follow.
Yeah. Yeah.
But then you lose context because right now we don't. That's why I add in the NinjaTrader charts for context. Also, if you check that lower high um,
Where?
before the reversal on the
Mhm.
NinjaTrader charts,
Okay.
the lower high, and
Here.
then you've got that move up. Yeah, on the left hand side, you could say that they're probably taking the stops above that high, and then it's exhausted. I need to enable my my MBO
Yeah.
to see if there was a stop run. Most likely there was, I think.
Okay.
Well, I would assume
I'm
so.
pretty sure. I mean, this is,
Yeah.
you said this is the cash open? Yeah.
The cash open is the last line on the hard left edge.
On which chart?
On the left chart. So you
This
see
one,
that
it's up here?
line? Yeah,
Okay.
that's the cash open.
Ah,
And then
okay.
the first vertical line, that's the first 30 minutes, and the second one is the IB. So that's the first hour.
Got you.
So, and then also if you look at well, not all the way at the bottom, but there's a white line below before we got the break. That's the overnight low. So
Okay.
this move, if you read my notes, it says there before the overnight break below. Before break below overnight. I don't know. These are levels that I'm paying attention
Uh-huh.
for auction market theory, and I'm doing my own thing there.
Yeah.
To build my trade plan, and it's coming along. But I still have some open-ended processes
Okay.
which I need to work on.
I would just say, one of the things that I've noticed, mostly through your participation in the competition, Stephen, which is fantastic, is your I kind of it sounds kind of cheesy or corny, but I like going over this and saying, like, okay, your superpower here as a trader is your patience.
Yeah.
You're really
and
good
it's
at
my
that,
downfall, my greed.
and you're able to
We like
hold.
people.
You hold for usually a long time,
Yeah,
and you don't overtrade. So you got some kind of Zen-like qualities there to just kind of analyze, take a position, and then hold it.
yeah. Well, that's what I'm trying to. At the moment, I've changed my target taking to a more ATM strategy
Uh-huh.
where it manages it for me. But I do have that patience to wait for long runs. So I'm thinking to supplement it with a second account that plays the longer runs, which I'm going to tweak because you can't. It depends where you are within the ranges what happened previously, which I'm still trying to figure out. Look, like I said, I don't have it all figured out,
Yeah.
but I am working on it. And I appreciate that you say that I am patient. Sometimes I don't think so.
Yeah. Well, then, I think you need to kind of firm up your process. Like the checklist
Yeah.
will be really helpful for you.
Yeah.
Because you're methodical. So, you use some of the tools.
Yeah.
So welcome, Brandon. I see Brandon's in here. So Brandon Trades is a trader and Bookmap user, and he's been helping out with the competition in some of the webinars, and he's also here as a guest coach for the session. So welcome, Brandon.
Hey.
Hello.
You have the mic on, Brandon, or not sure?
Thanks for having me.
Hey, there you are. Yeah, thanks for coming. I know you have to leave early. You've got Halloween kid duties. So
Yes, sir.
yeah. So all right. Well, this is what we do and go through trades in here, and let open the mic, and it's for us to listen and give feedback, basically, instead of like us to like blah blah all day long. So let's see. Is there anything else, Stan, that you wanted to go through?
No, that was perfect. And so
Right.
the next images is on the competition.
Okay.
While you load that one up, if I could just bring John's question, so I'd butt in there. John's asking there, Stephen, do you use that correlation tracker much? You got it on the chart, Frank. We
Yes,
assume it's NQ.
He asked me a while back. It's just on there, so I don't have to jump around because I am
Okay.
trading off a laptop.
Okay.
Oh, wow.
I do have a side screen, but it's just not enough real estate. I'm planning
Yeah.
to get some monitors soon to help my eyes.
You are connected with a wire, right?
Currently I am not, because I've
Oh,
just moved my laptop elsewhere. Today I was a little under the weather, so I decided not to trade.
okay.
But normally I am connected. I am hardwired connected
Okay,
with a
okay,
LAN
good.
cable.
Yeah, that's one of the first things that like people have data issues, and it's like,
Yeah.
you know, one of the first things we say, are you connected with a wire?
Yeah.
So okay, well
David, where's your slide?
let's see. Maybe we can go through this one a little quicker. Sorry to
Okay.
elaborate on that one, but we've got a bunch more to go through here.
Yeah, so I just found like interesting like how he tried to enter in it. So I was wondering if you were trying to scale to have a better price with all the lots than you had, and then took some off and add in, plus took some off, and actually that was a great catch. I was just
This is not comp though. This is a replay.
Okay.
Okay.
yeah.
Yeah.
Yeah, I sent this to David over the weekend. I think it was on Sunday
Mm.
night or something. And I just wanted his comment, like, is this how the pros, or like how you guys add? Because he always talks about adding onto a position when he knows it's going to
Thinking.
go in his favor. And I was just curious, like, what insight he had. And then I decided to share it. Um, yeah, and then you can see where I added a couple zoomed in shots, so you can see that I was busy adding. And
In here.
yeah, I think I was trying to get a better price, but then I was also scaling and taking it off. It worked quite well,
Okay. So it
of
looks
course.
like here's
But
where
this
you
is a bit of a hindsight.
started shorting right here. These little purple
Yes,
triangles. Okay.
yeah,
And then you're adding in. Oh, you scaled out here. It looks like a little bit.
yeah.
Then
I
you're.
started small.
Huh?
I think with five contracts, or like 10 contracts. Then I took off five, and then as it went higher, I added another five.
Uh-huh.
I can't remember exactly. It could have been one contract, or
Okay.
eventually I evolved to five.
Okay.
Yeah, this is after the webinars, and I was watching the webinars over the weekend about the liquidity and whatever. So I was trying to implement what I learned, and over
Nice.
here it worked out quite well.
Yeah.
But in the comp, it was a bit stressful. It it, it
Yeah.
didn't
Yeah.
go as I thought.
Yeah. Yeah.
Out of nowhere, buyers came in.
It was a
So
tricky few days. I thought.
yeah,
So. But
it's eye-opening.
yeah. Yeah.
So that's the point of it, right?
Yeah. For sure. And then also like I'm rallying, or trying to get the next competition, try to give you guys like maybe, I don't know, 10 million or 50
Good,
million
yeah.
or something, and that's where you'll have to use limit orders for sure.
Yeah.
Even on the ES.
Mm.
So I don't know. We'll see if we can do it next time. That'd be great.
Okay.
Okay. Yeah, that's really great to hear about the, inspired by the Institutional Trader webinar series. Great stuff. One of the things that really stood out to me in that series, and I don't know if you mentioned it in this image, but how like Marco, also Spencer, all of them really were talking about fair value, and they're playing a different game. They're just trying to get as much as they can on around fair value, and if it's below fair value, they're going to try to get as much on as they can, and that's the kind of their uh, guiding principle, and
Yeah.
understanding that can be really, really helpful. That gives POC a very different kind of meaning or context, I think, for example, or your anchored VWAP, for example, with Robert Rother. David, any comments?
No, I'll keep it short. So no, good charting as always, and it's nice to see the development of those trade management and scaling, Stephen. Yeah, and let's catch some time, do another sort of Skype or Discord call to talk through how I approach it. But yeah, you're definitely in the zone in terms of what I do, and I'll try and get a video down where I just let the screen get recorded, Bruce, so it just stays there, so it can see what I'm doing on my Ninja.
Yeah, sounds good. Stan, anything more that you had?
No, that's perfect. I was just interested about what you could say about it, but
Okay.
still, you have your context, you have everything. Yeah, that's perfect.
Brandon, do you need any more kind of backdrop to this, or more explanation, or do you have any comments? Looks like you're still muted.
There we go. Whoops.
There we go.
Are we just reviewing trades?
Yeah. So in fact, he took this trade in replay mode, and based off of kind of some of the institutional traders methods that were in the webinar series last week.
Okay, I like it.
Yeah, obviously, this probably has a little bit of hindsight as well, so most likely why it worked out. But I think getting in those reps and what you're learning through these webinars.
Mm-hmm.
And the lovely thing is, like, I can run it at 16:8 speed.
Nice.
That's the nice thing.
Nice.
So
Yeah.
when it's like live market, it gets tricky because you're seeing it like move so slowly. But yeah, guys, the replay is very powerful.
Yeah, agreed. The replay mode is fantastic, and I'm really glad to see you using it because maybe you knew what happened during this day, but then you go back and you retrade it. And, even when there's times you look at it, and God, I could see why I fell for this, or like you might even fall for it again,
Yeah.
and then just back it up again and like look at it again, and then trade it again, and if it didn't work out, back it up again, trade it again, because well, if it matches what you're looking for in your setup, and you'll master it. Do that 4 or 5, 6 times, and you'll start to get a feel for it. I sometimes I find the replay mode, you obviously know it was a down day, but where did you get in? How would you know to get in, etc. So yeah, good stuff. Brandon, nothing else?
No, I'm actually like learning like this is a different style of trading for me.
Yeah. You went through how you trade, basically just very, very simple, bigger picture stuff, and then matching up the liquidity within those higher time frame levels, and then you're trading your options.
Right.
Yeah. Okay. All right. So well, thanks, Stephen. I think let's move on. We spent already quite a bit of time there.
Yeah, good stuff, Stephen. Good stuff.
Take care, guys.
Thanks.
Take care, fella. Good talking.
So yeah, next one is Sijata. So yeah, I find really great again. So all the description, then he put so the macro view about the price action, all the context, what he observed, and the risk management, then he will take. And then we can go, so into the picture, and we have different slides, and I just really like about all the other flow element that we can take advantage of it in what you clearly just did. So that's just great. So in these images we can see like he recognized like those strong push into liquidity plus pullback that came after, and we can see where he took a position. So he decided to set his limits with this buying conviction just after then he saw it. So we can go in the other images to have more insight of what he was looking for. So thanks for noting them. It's clearly helping us. So here we have like yeah, more zone view, so we can see like sort of a checklist. Then it's very great to see. So resistance, tendency to support, distribution, the accumulation, and liquidity. So all the other flow, the key element, then are lighting. So yeah, just great. Plus the money management, it seems like clearly like moving with the conviction.
Yeah.
A bit aggressive, but still, you get you scale out front of liquidity. No, I just found, yeah, that's a good work, and you have a lot of consistency. So yeah, that's perfect. You can go in the third images. So to have now even like a better view about his entry, and so we can even see now in more micro what were happening into this structure plus the conviction and why he decided to set his limit over there. So yeah, I don't have a lot to say. Just keep posting and thanks. In terms of further flow, I think really you highlight the key elements. So for myself, so yeah, perfect. I don't know if you have anything to say.
Yeah, so Giotto is, I think he, at this time, he's always working, so he's not able to make it. But David, take it
Nice
on.
charts. Yeah, thank you, sir. Sling the ball. I'm in the batter's box. If we can get that, I think it was the first chart, please, Bruce, which is classic. Easy to say, Monday morning, isn't it? But look, you got that build-in liquidity at 2,500 right at the top there, massive. So we have a destination to go for. It is aggressive, as you rightly say, Stan, in terms of entry. And Rob, you'll be up shortly. If we look at this is not too dissimilar to some of the trades you're looking to snag onto. Here, we're getting in back to the FOMO thing that Stephen was talking about. He's seeing the move. We see from 9:30 going through, volume drops off, a little bit of net red, bit of blank, and then the buying kicks in. And we've got the upper target. It's a great trade. You've got a good place where you can put your stop below the sort of like where it says pull back if you wanted to have it fairly wide or not too wide, David. I'm sure the charts are moving at a nice bit of pace. As he's highlighted, you've got the strong push which was at 9 o'clock and then 9:25. Not sure the time zone, whether we're on New York time, whatever. But you've also got that higher highs, just sort of printing all the way across. It's a textbook trade. And this one, Stephen, is where that starts to move. That's when it's scaling away. Scaling away. You've got a very heavy target of 25 at institutional level. Bang. Lovely trading. Moving the stops around, moving the TPs around. Yeah. Very good. Very good. Brandon, sir.
Brendan, any comments?
Finished Freddy Krueger outfit on, I'm sure.
I wouldn't say for this one.
No comment.
No, I'm trying to I'm actually kind of learning from this too.
Okay.
Yeah, I know. We kind of threw you in here, and it's like, we expect brilliance now. So we'll put you on the hot seat like that. I mean, this is like a classic trade, like you said, David. I mean, this is your classic flag continuation pattern, and it's a beauty. And he really traded it well. Now I know it's in replay mode, but so what? Like,
Oh, what?
you know,
Yeah.
you learn how to
Muscle
trade it.
memory. Get them. Get them.
Yeah,
Yeah. Reps
yeah.
and sets.
I mean, I mean, God, it's easy to look at it in hindsight and say, like, you know, this is perfect. I would say, I wouldn't say it's too aggressive in terms of entry, but I would say it's too aggressive with the stop. I would have put my stop probably down below. But maybe not though. I mean, like once you see like these buyers come back in and pull away from these sellers in here, it's pretty much over.
It is. It is.
So
Yeah.
at
It
least to the
touches on
top of the
inside.
range or this high liquidity,
Mm.
you know. And you know he takes off some and then he holds it for the rest of it up here at 500, which is great. Yeah, it's really good trading.
Yeah.
And there's so many nice things in the pattern in here. I mean, clearly, you know, buyers. Look at the sellers in here. Pullback. Pretty deep pullback. But once those buyers start to come back in, you know, you're looking for that. You know?
Yeah.
And goes right to it. Not too much of a problem. Yeah, God, there's nothing more. I would just say put this into your checklist. There's kind of a checklist on the Learning Center. If you guys are unaware, here go to Education, and then Strategies and Setups. We only have a couple in here. I need to do more. But the pattern in Bookmap here in diagram form is exactly the same thing. You know, the checklist is here under the execution part, but that might be a good starting point for him, and then he can edit it however he wants. So just so that you know, if anyone doesn't know, that's where you can find that stuff. Yeah. Nothing more, David, Brandon,
Yeah.
Stan?
No. For me?
Nothing more. That was a good one, and keep posting.
Okay.
Definitely.
And the last one is so Punisher, the Punisher.
Okay.
So yeah, for that one, if we could have a bit more of explanation. So in this case, it was just buying a dip at early open after a flush below recent low. And so if you could maybe start to annotate like the element that you are highlighting. Yeah, plus maybe having a checklist, trying to add more order flow elements. It's really great what you do, but still I can understand a lot of things, except in this case, for example, yeah, the big sellers that came and then some buyers that were in, and I'm wondering where you would take the trades, what would have been your money management.
Yeah.
If you could maybe give us more explanation and highlighting more things.
Yeah, there's just a rectangle on here and that's it. He's new to the game here or to the academy. But there's some really great stuff on the chart, at least, that he's recognizing. I think he just needs to communicate it first to himself and then for the rest of us.
Yeah, definitely. But nice to see him. Nice to see him.
Yeah, David, anything?
Only thing, if I was looking at that chart, I'd be going over to the volume and dragging it a bit higher up. Maybe that's just the way I like my charts. You know, I like to see more of the volume bars as a percentage of the real estate. That's really small, but maybe that's just me. You know? But yeah, to me, volume, as you all know, is a really important tool, and we see that time and time again on all these charts. And maybe it's just my eyesight, Bruce, but I'd like to see a bit more of it. But that's it. Yeah, no good.
Yeah,
Well,
me too. Well, and there's no liquidity. Where's the liquidity? I mean, like, would love to see that play of high liquidity. Where is it?
mm,
And it's an interesting pattern as well. Like you were saying, Stan, here's your flush through. This is obviously going to be your stop run. And then this kind of little wiggle in here, it never comes back. I mean, we see this so many times. You know, look at the aggressors come in, right? Where does the pullback come to? Right where they started. That's it. It's not coming back here. And now it might, you know, over here, because it looks like we're not finding so many buyers. You're starting to find some sellers. So, you know, it might have done this and come back down. You don't know. This does not look too strong. It's really just back and forth. This looks strong. And yeah, I mean, we still, like you said, David, I'd like to see more of a buying in here, but it's you start to see the selling come in as well.
yeah.
That's all I have. Yeah, anything else, Stan, Brandon?
Yeah, no, for me, just if you could give us more explanation and highlight some element. And I'm wondering for the liquidity, if it's just looking at something, different than we are looking, like the histogram that we can see above and below.
Yeah.
I'm wondering if it's another way of looking at the liquidity than we're looking at it. Then I think he explained in some of his previous slides. So it will be even interesting if you could give us more about how you are looking at it, if it's in a different way. But yeah, no, great job. Thanks.
Okay. All right. Let's move on. David, you're up.
Right, Rob. If we can get Rob onto the stage, he's still with us. Will be good. So these are Rob's competition trades.
Okay.
From
this one's
this week.
Rob.
Yeah,
Okay.
Tuesday and Wednesday. So as a broad intro, there's some zoomed out charts to sort of set the scene, which you may wish to talk to about, and then there's some trade charts where we see him spanking away with the millions of dollars that we had in the competition. So I look forward to Rob talking to, and this, as I said a little bit on, some similar sort of trading approach that we've seen on a couple of the charts so far. So it'd be interesting to see how Rob is honing his skills on that one. So this is a zoomed out one. Hi, Rob. Welcome.
I got my mic to work this time.
Fantastic, sir. Welcome. So I've got trades from Wednesday and Tuesday of this week. These are right out of Discord. So yeah, talk us through. So I've taken the two posts that you've got and all the charts that were with it.
Yeah, I think basically the problem is, I was trying to, I had some volume profile chart, and I thought I saw a point where it would turn around. If we go up there on the left, you see where I entered, long up there.
Here?
Yeah.
Okay.
Yeah, I tried to change the color on these so it contrasts better against the red and the green. So I thought I was looking at a volume profile level, and I figured, okay, this is where there's likely to be a turnaround point. And I saw that green come up with the sweeps and the stop runs and everything going on there. So then I figured, okay, this is a point where there could be a turnaround. And this is different than what I've been working on. This whole thing with the contest, I've been working on micros lately because it doesn't have all this algo junk all over the place.
No.
When you look just at an MES or an MNQ chart. And so basically I don't know what I'm doing with this, throwing on 50 or 100 NQ lots. And basically, it's I can tell it's starting to not work. it's not going the way that I thought when you got that lower high there on the left when that point of control moves down
Here.
from where I entered. Yeah, that's probably the point where I'm going, okay, this is not going the way that I thought it was. You've got no buyers interested there.
Yeah.
And you just see 3 red dots. And for this, I increased the size of the red dots to try to just reduce the noise going on. So each one of those is I think that's each dot is a minimum of 100.
Oh, okay.
So I could filter out, not have as many dots.
Yeah. I just see best bid and offer.
Yeah. So I was just holding on to it for too long. You see, God, I think I lost 100,000 right on this trade here, or it was like 80 or 100,000 or something. So that was a pretty bad one. Then, yeah, I mean, but I was still looking at these volume profile levels, going, okay, this somewhere roughly around here where I have no idea. It seems like there's going to be a turnaround at some point, and then it did start to turn around there. You can see on the right, I have some entries, and and then that one worked out. It didn't make up for that other one that was really bad whatsoever. I was just trying to have some fun with the contest. I don't know what I'm doing when putting on 50 or 100 NQ lots. And I've just been working on doing micros lately.
When we spoke before, Rob, I appreciate this is a competition, so mood music and everything else is different. But you were rightly talking about the hesitancy to get into trades. Has that started to fade a little bit, or is it still the same, would you say?
Maybe it's more holding on to bad trades. The problem with, just being able to say, okay, this is not going the way that I thought it was, so I need to get out now.
Okay. Yeah.
And then I can't find the balance between, I'm just bailing too early versus this is not going the way that I thought it was. I have to get out now.
Yeah, that rub, isn't it, between giving the trade time to breathe versus getting stopped out all the time.
Yeah, that's kind of why I switched to micros, because what I was doing with the minis, I just didn't have enough breathing room, and we have a lot of days where you have a lot of chop, and that was just taking me out because I would have to put my stops way too low or too high where it's too much risk. So I figured, hey, I put on a few micros. I got a lot more breathing room.
Yeah, we saw that on some of your charts. I think it was last week or the week before. Stephen's rightly pointing out NQ is dangerous. I know that sort of stating days end in a Y, but it is dangerous. That's for sure. There's some lovely patterns on this chart again, Monday morning sort of stuff. Particularly, I'm so bent out of shape of always buying the dip, but just slightly to the right from the middle, you've just got that higher low getting printed and so forth, volume coming in, and so that it is a tradable instrument, that's for sure, Bruce. That's for sure. That's for sure.
Yeah.
But yeah, we had talked before about exploring some other assets, and that is that something you've had time to do as well, Rob, or you're still focused on MNQ and NQ at the moment?
It's overwhelming as it is, and trying to add even more instruments when I don't know what the hell I'm doing with NQ and ES. It's just going to add even more to the confusion for me, and it's already incredibly confusing, all of this. Anyhow, so I mean, I'm just getting too many ideas from too many different people.
Oh yes,
everybody's got some different way of doing it.
Yeah,
and all of them are valid. If it makes money, that's it. It works. If it makes money consistently, it works. and that's it. It could be
Yeah.
somebody flipping coins or whatever. You know, it's just do you have proof that you've actually got some edge with it?
Mm.
So yeah, I don't. Yeah, I'm still trying to figure out what I'm doing. You know, sometimes you get too much input from too many people.
Yeah.
And then I can't make any sense of it. You know, I'm
Okay.
trying to go off what the order flow's saying. And then there's a buddy I was talking with who I know is pretty good at it. He's actually trading and he's been doing it for quite a while.
Okay.
And he gave me his volume profile chart on TradingView, and
Mm-hmm.
you know, and we talked on the phone for quite a while.
Yeah.
About some of it, and I'll be talking to him again. You know,
because you've been in and out of Tom's room a few times, I think, as well. Haven't you sort of seen what the boys and girls are doing there?
yeah, some of that gets a little too complex for me, and you know, they seem to be big fans of importing all their levels from Investor RT.
Yeah, yeah,
And
they love the ISP.
that's a very expensive
Yeah. It is
software package, and it's very cumbersome, difficult to use.
Yeah.
And I was never able to get it to import all the volume profiles like what you see Tom have on his streams, where it automatically updates it with the cloud notes.
Yeah, I know.
I was never able to get that thing to work, even after spending like I don't know 40, 50 hours screwing around with it, trying to get that thing to work.
No, not good. Not good.
So
not good.
I just have a simple trading view chart with a few different volume profile levels. You know, it seems to work pretty well for giving me that kind of view, and then most of what I'm doing is operating out of Bookmap, trying to watch the order flow, see if if the volume profile is telling me anything, and yeah.
Yeah, I mean, I would say the same things before, and I appreciate, as you rightly say, I'm back to my golf. I'm on the driving range, and I got 7 people telling me 8 different things, of 9 other ways of swinging my club. So I'm totally with you, Rob. I would just reiterate my point from before, maybe looking at some other instruments, whether it's currencies, whether it's pound dollar 6B, whether it's some of the breakfast commodities. They just don't move as brutally. They can be quite glacial in terms of their moves, which as a trader can give you, and it's a plural VU, so it's for Stan, it's a VU Stan, you know, it can give you more chance to see the patterns and everything coming up without getting your face ripped off and your teeth kicked out that you will do on NQ. That's the only thing. But I know, you know, it's easy to preach. I appreciate that, Rob.
Yeah, and other than that, I'm just you know, I've just been kind of stuck on this the last 4 years.
Yeah.
Because you know, I've been working on this stuff for 4 years, and I don't think I'm really any closer towards making it an actual business, making money off of it. It's very frustrating.
I can imagine.
In fact, every day I'm just thinking, okay, is it time to just throw in the towel on the whole thing?
No, none of us want that, Rob. We all want you to succeed. I'm sure everyone in the room here tonight, here today, and everyone else wants that, Rob. And I'm sure we can get you there some way, can't we, Bruce? We don't want to lose a member. We don't leave any man down here.
Yeah, no, absolutely. And you know, Rob, I mean, I really hate hearing that now you're jumping over and looking at volume profile because some other people are looking at volume profile. That's in my mind, like, that's just really, really dangerous. Just because it's working for someone else doesn't mean it's going to work for you. And you need to be very careful. I mean, we all do. When, you know, someone has, oh, look, this is what I do, and I make, you know, $1 million a day, or, you know, whatever. So instead, it's like it's a starting point. Okay, that's an interesting idea. Let me go vet that idea now. If something comes up and it's like, okay, I'm going to go study that idea. They're doing this, but don't. And if you get a feel for it by back testing it, looking at it over time, end of the day, but not during the day, and I mean, especially not trading it, and be very, very careful with those things.
Yeah.
Like I would suggest that I think what might be helpful for you is getting caught up in the maybe in the order flow, whereas I think maybe stick with kind of market structure as a bigger picture thing, because when you started to, it seemed like it started to work for you. You're looking at simple trend lines or channels, or like a Darvis box type of thing, and it seemed like it. Now I don't know, but if that works for you, then take it further, get better at it.
Yeah, seems like whatever method I'm trying to use, I might have a couple of good trades in a row and then just a big one that annihilates everything.
Yeah.
I might do good for 2 or 3 weeks in a row and then just get annihilated. There's other times where I can't figure out what the hell the market's doing, and then I'm stuck there for like a week or two where I'm just like, I have no idea
So
what the hell's going on.
okay, so in fact, let me invite to the stage. Well, I mean, a Valley fan. I don't know if it's nice to have you in here. I know you're a busy man now over at Bearish Bulls. And John, if you're game, John, like I think we got some content to go over with you as well. However, you had mentioned something last week when we went through your content, that I think, and you said how big of a difference this made. So, John, first we'll start with Valley Fan. Valley Fan has a very specific strategy. He's looking at his floor trader pivots, and then he has a way of trading it. Like if it blasts through his floor trader pivot, he takes a position, he's out. He looks for the next one. And when it hits that one, then he gets back in and looks to, he takes a trade and he manages it, and then he gets out over time. So he's all in, but then he, scales out. That helps him with, being able to reduce the risk. And what John that was really great to hear, John, about how you pay yourself a paycheck, you take some out, and then now you've got the rest to add back into the account over time. But you're guaranteeing, like you had an 80% win rate on the first scale. So take your first scale, you pay yourself, and now it's a different game, and that alleviates the stress. So the point I'm getting at is the psychological part of being able to keep your account and not blow it out, and being able to trade at ease a little bit better with a clearer mind instead of being nervous. So
yeah, what I'm trying to do to try to minimize the risk to my capital is trying to go that prop firm route, because I don't have some tremendous amount of money to work with. I don't want to just destroy my whole life savings on it, and I figure that's a lot less risk trying to go the prop firm route.
Yeah, well, I mean, that's another way. Trade, I mean, if you blow out the account, you have to pay another, however, 100, $50 or whatever, 200 or 50 or whatever sale they're having, and do it again, instead of losing 1,000. Sure, that's good. Maybe that's the way to go. But I don't know, Valley Fan and John will just, Valley Fan wants you, if there's something there that helps you that I mentioned that I just kind of mentioned in brief, but I'll let you elaborate.
Oh, can you hear me fine?
Yeah. How are you doing?
Okay, good. Like the biggest thing is, I think the funded accounts are wonderful and great, but there is a competition aspect to that. Like you have metrics you need to meet, and you can only take so many losses and an amount, and it can become a little overwhelming because I will say when I first started the combines for my fund accounts, like I got caught up in that kind of competition aspect of it. So that also may bring up some things in your trading. If you're trying to deal with that competition aspect, but you have some things going on in your trading you still need to correct. And I would still recommend just staying in sim during that time while you're just trying to find that consistency and correct things. And then once you start seeing that you don't have those big blow ups and you're being more consistent day in and week out, and that's when I would like start one of those combines. Like after that, like after I know that my system is working and that my trading is good, and now let me go test myself with an account, try to earn a funded account and go from there. Because I will say they and other traders I talk to, it does seem to bring in that aspect a little bit, that especially for me, that competition. Like I want to hit all those metrics. I want to do it, in a good way, and it looks good. But all in all, my trading needs to be correct, and I need to be trading consistently and showing myself to give myself that confidence to then move on to something that's going to add a little bit more emotion and a little bit more into the trading itself.
Yeah, good point. I mean, like, you bring in that element. That's a nice subtlety. Like, so you feel the charge that, or you're kind of compelled to trade and meet performance metrics with a funded account. With your own account, though, you have much more kind of flexibility. What it sounds like.
Yeah, and even just like in a sim account, let me see if I'm ready. I'll go into sim for a little bit and then let me trade and adjust things, and okay, now I've got some confidence. I'm seeing my adjustments are working. I'm seeing things differently, and now let me add that little bit extra into it because I feel like I'm ready for it. Because I would say if you're still having issues with things and still trying to find how you trade and the right spots, then adding something that's going to drive up your emotions is going to throw a whole new kind of wrench into everything if you're not really ready for it.
Good point. And there's another point though too. Like, you already know though, and this is a big difference. You already know that like John, that you're hitting like 80% or over 50% on maybe your first scale, something like that. So that's a huge thing, because now you know that you can hit that and hit it, and now you can kind of rest a little bit easier.
Yeah, and then you get to where you're comfortable with even pushing that first kind of partial out, and searching for, looking on Bookmap and like, where can I find some liquidity? This looks like a good area. Let me find the liquidity there. Let me see if it shows up at some point. And if I'm like, well, I'll take my partial here. That's a nice swing high if I'm trying to go long off the bottom. But I see some liquidity a little bit higher. I might wait and try to take that partial and get it right there rather than taking right at 2-1. Well, if I take a few extra cents, 10 cents, 20 cents, like that stuff adds up over a while.
Yeah, John, did I state it correctly, the way that you are kind of managing your money?
Yes. Can you hear me okay?
Yeah. Mm-hmm.
Okay.
Yeah, Nick.
Yeah, the only thing I was going to add, the prop firms are great and working in sim is great. They're all wonderful ideas to preserve your capital. But ultimately in the end, it comes down to trade management of each trade. And that's where Bookmap comes in. It allows me to evaluate the areas of liquidity, and I can make a quick decision about whether or not it's worth it to participate. Is the risk versus the reward there? And are things working in my favor? And then if I can get that first contract off, yes, at the end of the month, I can use it to pay myself. But with the trade, I can move that stop up and I can reduce my exposure for that trade. And that's when you can begin to harness the risk that's associated with these futures, because my goodness, anything can happen, and it usually does. And that's a way to safeguard, I think. So, again, the prop firms are great, and you can sit there for a year in props, but your time is valuable. And so the sooner the better that you can get into each trade and determine what your risk is, what your profit potential is, and how you're going to manage that.
I agree with all that. That's great stuff.
Yeah. I mean, we got 3 people in here that are really excellent at their money management. David, you as well. Like, I love the way that you do this. You trade kind of, conservatively, make some money in the pre-market, and then now you've got banks' money, and you can kind of do it whatever you please as long as you don't lose. If you lose all of it, c'est la vie.
Exactly.
But you're not going to lose. You're not going to lose, though.
No, that's the thing. I try and have that philosophy, easy to say, but the first trade is the only risk of the day. That's my goal.
Yeah.
Those ETH London Openish trades alongside John, that's where I'm actually risking the dollars. After that, you could say I'm literally in sim, so to speak, because I'm using market money.
Yeah.
It's the plan.
Yeah, guys, it was really great to hear some of the ways that you're managing your money and your risk. And it's such a, like John, it really hit home when, you mentioned it last week, how that made a big difference for you, monetarily as a business, but also psychologically.
Yeah. And on to the, if I can chip in, John, I mean, I say John does ETH with me now. For you, Rob, you're West Coast, so you just have to step an extra bit later. Unlike John, who's East Coast, just a little bit later, and come and join us, girls. Trade in the London Open. That is a little bit more pedestrian on these assets, just a little bit. John, what do you think?
Yeah, I agree. Absolutely. For sure. Yeah, and there are times to participate and there are times that are not. But like you said, David, at the London Open, typically there's an opportunity there.
There are, yeah.
Yeah.
Very much
David,
classic. Yeah.
do you think as more of the market's looking for 24-hour trading, do you think we'll start seeing more action then on equities as well at an earlier time around the London Open too?
Yeah, I think so, because if I segue, that was the thing I was talking to Tom about on Sunday, I think it was, so exploring how that could change and stating the obvious at the moment for me and John, if I say it like that, okay, we've got the daylight saving hours just changed, but typically London opens at 8 o'clock my time, London time, and then I have an hour before the US equities come out of the blind and they're back online. If that's going to disappear, so the US equities are there when London's opening, sure, it's gonna skew it. Got to. And then you have the options, what's happening with the options, with the European options and the US options and all that mixed into it. So it's no time for the rest. That's back to a point, Rob, where I would have said on when we talked this before, I have had phases of time when I was trading just cattle. I think we Bruce, you laughed about this because you've done similar things, trading GF.
Is this when you had to actually bring the cattle to the stock market?
It could well be. In Texas, here we go. It could well be. But those markets that are only open for sort of like a spit on the clock of a day means you don't have to worry about Globex. You don't have to worry about what's happened in Asia. You don't have to worry about all these equities. You just worry about cattle. Bruce is laughing, but he's got it muted. I know you have, Bruce.
No, I'm on.
I like it. I like hearing what it was like 100 years ago.
Exactly.
I'm
Yeah.
sorry, David. I don't know how old you are. I'm old.
It feels like 100 years. Trust me.
Let's see. DNT, did you have something to say? Like I see your hand is up. Just curious. And what else was I gonna mention? Oh, so back to you, Rob. Like how for you, like I think you got to find that first scale or whatever it is. And I mean, here, look, the same thing, like for myself. I mean, look at even for the competition. I mean, I didn't trade all that great in the competition, but look at all these stupid trades in here, right? But did it really annihilate me? No, right? Don't let it. Don't go all in and then like hope and pray, and then like this is going to shoot up to like 500,000 or something. I mean, it's a competition. It's different, and, and I'm testing. Believe me, a lot of things in here. Like Maxime reaches out and goes, "Can you look at this or that, and can you try it on this instrument or that instrument, etc." But the point is, like, make some, and then now you're in a position of strength, like John was saying, or like Valley fan, and the way that David trades as well. And now you can rest a little easier. So you got to find something that works consistently, frequently, and work on that. We can talk more, I think, maybe in the webinars during the week, if you like.
Yeah, I have trouble eliminating variables.
Yeah.
Seems like there's just so much random stuff going on. I can't come up with a fixed set of events that's supposed to happen to do the trade. And when I try to come up with a checklist, I'm like, is any of this real, or is this just a bunch of nonsense I'm imagining?
The checklist for me came way later. So I know, I feel you on that. I thought it might have came first, but for me it didn't. Maybe for others it might have.
So
me and you went through the same kind of journey though. I think we both, I don't know, you might have started before me here, but we both started in Tom's room, and I was in there for like a year or something like that. I don't know how long you were in there for.
Yeah, well, I still hop in there every now and then, mostly just to watch his webinar. I just can't really keep up with what they're talking about in the T-Lab chat. Sometimes it's just people are just throwing out all sorts of stuff, and I can't keep up with all of it.
I don't intentionally, and when I left, actually, is when I found profitability. Tom taught a lot of context, and it was helpful. So I think you learn a lot. I think you got the gist of it, and going through all that same journey, I feel you, and it was really difficult to kind of gather it, but leaving the chat helped tremendously, whether you know it or not. It plays with your mind, and it plays with your emotions in ways that you don't even understand. And even listening to the webinars, I think you watched a lot, even maybe I would even say enough of his webinars to understand or get the gist, and to take what you learned from him and make it your own, and craft your own thing. But I don't think you have to keep listening to Tom's narrative. I think now you can take what you learned from him and make your own narrative based on what you've learned from him. So
I'm not really the creative type, so this is I mean, any sort of work that I've done, it's just kind of been, here's what you do, and you do it. There's just set procedures for everything. I'm not used to coming up with stuff by myself.
That's
so
fine.
so trying to get into this whole thing, it's like the opposite of what I've always done. I've always gone to work, and it's like, okay, this is what you do, go do it. I've never been in any sort of management or creative type of jobs. I've always done technician work pretty much, where it's like, okay, this is what you do, this is the job, do it, and here's exactly how you do it, and then you go do it.
Yep.
And I can't do music, I can't paint or any of that. Maybe some people with that kind of a thought process, they're able to handle this kind of creative stuff easier.
I think it benefits you not to be creative, to be honest. You want to be blunt, straightforward. It's too bad Brandon's not in here. Like his strategy is so simple. And
I'm just trying to find what's, how can I get all the variables and stuff out, so I've got just because we've got the trading journal now. I've got that all dialed down. I can make different files in there now. For different things I want to test, and it's all automatic. It's going to tell me whether I've got an edge or not. It's got all the data I need to determine that. It's more like, how do I eliminate different variables so I just have a fixed process, so I can just repeat it over and over again, get my sample size, and be like, okay, out of 100 trades, how many of them did I make money on?
Yeah. So I know what you're saying, man. It is tough, and I didn't hear what you said because I was getting a phone call when you were saying it. I know you said you're not like the creative type, but when I was saying that, I think you've watched enough and learned enough from like Tom and Bruce, and that we all kind of you've learned a lot, and for you to kind of take all this and sit down and then start and then kind of like break it down yourself. I don't know, like the way that I kind of went through it was like a top down approach. So starting from the higher time frame, so learning how like Tom does it, I still kind of use that method, like the micro composites, and so learning.
I've got something similar on TradingView. I've got all the stuff: weekly high, yesterday's high, opens, closes, previous points of control, and IBs and everything. It lists all that stuff out, and then I can zoom in and out, and it's got a composite of the different days. I can zoom back maybe 2 weeks or something.
Another cool thing too that's really neat, and I don't know what platform. I know that I don't know, TradingView. I don't know if it rolls over. You might be able to use SPX, but using anchored VWAPs on a higher time frame has been really helpful as well to see intermediate trend as well, and interacting on those anchored VWAPs on the higher time frame as well is really nice. And that's a simple strategy, and that's working from a higher time frame. And the only problem with that is you end up having to widen your stops. But and I mentioned on the last webinar the things that have kind of helped me, widening my stops a bit more, and making a price map. And however you do that, maybe if it's on the higher time frame, or if it's on the daily, or on just the intraday time frame, which is just today. Like those absorption zones have helped me to like narrow down where I actually interact. So if you took let's say what you learned a long time ago, which was like context, reading context. If you have an idea of direction where it might go, you can interact in those small zones, and and if it goes your direction or not. And then the other thing is if you don't have a clear direction, you can sit on the side and wait, and you don't have to trade. And that's the other thing. And we hear it from all the other like Robert Roth or you know all those other traders that are saying that our big and Bruce, you know, our biggest advantage is that we don't have to trade, and it's the biggest thing that we have going for us is when something's not clear to us, we should just sit out, and that is the hardest thing. But it's also if you can master being a disciplined trader, and then the next thing is interacting in areas where you in your price map. But combining those two things, I think you can really make a huge. That's where you kind of make that turn. Is one, being a disciplined trader, knowing when to interact and when not to interact, and then having your zones or your price map, so you interact in those zones, and you're not chasing and you're not FOMOing in, but you have your stop set. And if your stop gets hit and you don't get a scale, then you know, maintain that discipline and just wait, you know, take a deep breath, go for a walk, whatever it is. But I mean, that has changed my trading quite a bit, and it took a long time, but I think we kind of both came off been down the same journey, and it's a long journey.
Yeah. I mean, it becomes a big problem though when I have like a week or 2 weeks where I can't figure out what's going on. You know, it's a business. I have to cover my overhead and everything.
Reach out to me. We both do the same thing. I think we both do micro composites. I do that.
Yeah. I mean, mine isn't as complex as what Tom's got going on, or
it doesn't
Rod or some of the other guys in the
doesn't
T-Lab.
have to be complex, you know. Look,
I mean, I don't want it to be. I just you know, really, I just want to have my thing that I do, get the money, get the hell out. You know, I don't want to sit there being a scientist all day on it.
Well, sure, but like, you know, we all want just the money. That'd be great if it just rolls in, but you know, it takes a lot more than that. I mean, it's just not like you find the magic thing and just trade it over and over again. That'll work for a while, and maybe it breaks down, maybe something else starts to work, but you have to keep on, you know, refining, and you know, you continue to learn, and I think I don't know, Rob, why don't we this has been a great discussion. You've gotten feedback from 6 coaches in here today, or you know, 6 people. So you know, some pretty good feedback, I think. In terms of the simplicity, I don't know. I was just going to say, you know, I can cover that as a subject tomorrow in the webinar, and then maybe that's helpful for people. But if anyone else, you know, David, Stan, Vale Fan, John, DNT have something to say about the simplicity, it's but let's move on to the next person, I think.
Okay. Thanks, everybody.
Great talking, Rob. Well, chat
Have a good
soon.
one,
Yeah,
Rob.
reach out, buddy.
All right. So let's see here.
I only had the one because I was my London bit, so that's me done. Thanks, Bruce.
Okay. So whoa, you got all of these on. These are all Rob. Wow.
Yeah.
Wow.
Yeah,
We only went over one.
I know.
Yeah. Oh, just one note on here, guys. If you see this on your Bookmap chart, this little yellow line here, I'm actually to blame for that. I was telling the developers that with the stops and icebergs, if you get disconnected, and there might be some sort of discrepancy in the MBO data, then draw a yellow vertical line at that area. So that's why you see it here, Rob. So it makes me think that your connection is not so strong. I don't know if you're connected wirelessly or I don't know, some other issue, but just a note on that, because you guys might see that. That's what it means, and it is by design. So because we got so many people from Scott Pulcini's room saying like his is different than mine. How can I trust the MBO data? And it's mostly due to precisely this, that they were disconnected, or there was also timing, that their computer clock was different than someone else's clock. So we found ways around it, but the MBO data is the MBO data. You can trust it. All right, so let's see. Moving along, David. Next. What you got?
I only had the one. I only had the one for me.
Oh, who?
Oh, I only had one person this week.
Oh, okay. Well, then who's got John here, and who's got? Let's see. We got John and got other. Well, since John's in the room, and let's just go over. Let's go over John. We got Laura here as well. So let's see here. Okay. All right. Yeah. All right, John. So this is great. You got your checklist. Beautiful. And you got it marked up here with the numbers. Walk us through your trade.
Okay. Well, as I show here, the steps 1, 2, 3, that frames up my trades, all of them. So whether I'm trading stock, whether I'm trading the futures, I do like to trade off the gamma levels. So they really do frame up what I do, or VWAP, one of the two. But I tried to trade from one of those two things. And that's enabled me to limit the number of trades that I take each day. I don't want to take 25 trades a day. I want to take no more than 5. Today I had 3, and 2 of them were in stocks. So, and it's all basis from having that level in place. So you can see that, I note VWAP is something I want to trade off of. I have a key gamma level, and that's, and then I have liquidity up there. So there's a few things pointing in that direction that allow me to identify that as a potential inflection point. And then it's just, let's see, where are we going? Short. We come up, we reach that area of a possible inflection point at the key level, and then we start to fall back. VWAP is there for a potential target to the downside, and then we're mapping a lot of liquidity down below at 69, and that really represents the allure for the trade. That's the carrot. And so I have 2 levels of limits here. We have at the top, we have a gamma, which is a resistance level unless and until it's taken out, and then we have this liquidity at the bottom that represents the target for the range, and that's where it went.
Nice trade. So and then tell us a little bit about the entry here, the short, because it looks like a bit of a pullback, but it was the high. You also have high liquidity at this level here.
We have live liquidity in there. Like I said, those first 3 things, they make up the chart. They make up the basis for the trade. If I don't have them, I don't have a trade. So, I find a lot of times that when I post my trades into like the Spot Gamma Discord room, they'll say, you're trading icebergs. I'm really not. The icebergs that you see working there, they help identify the trade. I'm right behind them. I'm getting short with them, and as soon as they give up, I'm looking to give up. But it's more like just the pickle on top of the sandwich. The trade is the framework. Is the liquidity for the target. It's the resistance of the gamma level. But it all plays into the failure to go back up and recapture this resistance, and then the icebergs are working in here. They were pretty substantial, and so I can place a pretty close stop in here, and I feel justified in taking that risk. The target for the first contract, like you mentioned, I always like to take that first one off, and that allows me to immediately bring my stop down as soon as I get this first target, and now I'm okay. I've harnessed the risk of this very risky environment, and now I have a clear head, and I can wait for this thing to work out.
Yeah, nice. Really, I mean, so okay, let's just back up and kind of unwind that a little bit.
Okay.
It's really basically it's quite simple. And and the only reason I'm doing this, John, is because of what Rob was talking about. Here you have your gamma level. Here you have high liquidity at your gamma level. Now that price is coming up toward that area, and then it doesn't make it up into it. You've got your checklist. You know what you're looking for. You know precisely what you're looking for. Here's where you take the risk, right? Now you've got there's liquidity here as well at a lower level. Now we don't know. Price might have come through, might have blasted through that level, and you're out. That's it. As simple as that. So from what 82.50 on up to like maybe I don't know how you moved your stop down, or you kept it really tight here like this. Is that correct?
I keep it really tight. In fact, if they take out that working iceberg order, I'm likely to just get out.
Okay,
I don't. So that initially my ATM is going to put that up there, and I display it up there, but I don't wait for that to happen, because if prices were to take out that working liquidity or that working iceberg, then I would expect them to go up there and get that. So why wait? Why take on that drawdown? So that really represents a litmus test for me. This working iceberg.
Yeah.
And I can get back in if it goes up there, takes it out, and comes back down. I'm okay with taking 5 or 7 ticks. I'm not okay taking 20.
Right.
That's the
Definitely
problem.
not. Definitely
And
not. Yeah.
and because I'm very willing to get right back in. I don't mind that. And I do that quite often. I'll take a couple of shots for 5 or 7 ticks, but that'll keep me from taking those big stop runs against me, because that just kills my head.
Yeah. So there it is. I mean, like your structure, your trade structure is right here in your checklist. It's simple. 1, 2, 3. You got it here. And now you put on the risk. Now you know what you're looking for. You've got your target down here. So you're looking from plane from here to here. And you've kind of back tested, or you've traded this enough to know that you have high potential. You got your VWAP here, take your profit off here, and now you just sit in the trade, and kind of kick back a little bit. You never kick back, I don't feel, but like you it's not messing with your head, and you've taken the risk, you've reduced the risk, and now you can be a little bit more clear with thinking.
Yeah, it's just a way in which you can limit your exposure, your net exposure to this.
Right.
And that's been key for me.
Right. Yeah. So I don't know if that helps Rob a little bit, but
the one thing if I do just have a second, I was itching to say something to Rob, because this is what I did. I marked down the things that worked on this very nice trade. And I think that if you were to do that on your trades during your trade review, and then pull out all the positive factors that went into the good trades, that together makes your trading plan for the next day. And so for me, for the last decades, that's been the daily cycle of review, planning, and execution. And that's how I've been able to refine what you see right here. So when I say those first 3 steps make up the basis, the reason for that is from that daily cycle of saying, stay out of this, trading in the middle of nowhere when it comes to gamma or VWAP, because it didn't go all that well for me. And that's how I was able to hone this thing down very specifically. I mean, you can make 40 decisions a day for a trade. I take 5. And it comes from that daily review, planning, and execution, and nobody can do it for you. You have to, it's an arduous task, but that's the process, I believe.
Yeah, I love hearing that, because you made it your own now. like maybe this was someone else's idea. Oh, they like to trade spot gamma levels, and they look for liquidity, and but now you looked into that. Maybe you traded it, maybe you kind of back tested it, maybe you did it in replay mode, or look back on the day as the day's playing out, and then you started trading it, and now you're writing down and honing things that worked for you, and this is starting to turn into your trading plan, and that's the work that helped you hone that trading plan, and now you know what you're looking for. It's not someone else's. So yeah, that's really great to hear, John. I don't know if there's, I'm just kind of paraphrasing it, and but if there was, like on this one, how would you review this? Maybe go through the process a little bit.
Well, first, do I have a target? Do I have limits that identify the frame? How do I frame this thing up? So if I didn't have a gamma level up there and I didn't have liquidity at the bottom, no trade. There's nothing more to discuss, right? So exactly, right. When I look through this from a very critical lens, I'm not sure if you have the next slide, but I did have to move my target up because we started the base at 72 and a half. But
maybe this one.
I don't. Where was
Yeah.
it?
Yeah, it looks like,
yeah, I moved it in
like
place.
One,
yeah. And you see where it was starting to base up, and and that just comes from just sheer money management. That you've got most of it. It's a positive trade. You're adding money to the kitty. Take it. Take the money. And so I'm pretty quick to. Last year I did about 1,800 trades. And when I looked through all my trades, the thing that mattered the most was the consistency. It didn't matter if it was 6 handles or 12 or 10. It was consistency. And so I'm always looking for the path for consistency. So, and not sure if you have the other chart or not. Let's see. Do you have the other chart there, Bruce, that makes the basis of the chart? Oh, okay. Well, the other key thing, yeah, here you go. The other key thing that I use, and I really love the work by Spot Gamma, is that, in these last 5 years, the markets have changed so much and how options have influenced these markets. And so with every trade that I take, I'm looking at this hero, which is the real-time influence of the options. And it's like swimming with the current. It's just easier. And so one qualifier for my trades, and I put that in my checklist, that meets that criteria, that I'm trading with the influence of the options, because like I said, it's just like swimming with the tide. It's easier. Why fight it? Because they're so prevalent now. 25 years ago, we didn't think about options, but now today, they move these markets. And it's another way, it's another condition I put on myself to limit my exposure and only be trading with that flow.
Yeah. No, great to hear. Yeah. Stan, David, any questions? Valley fan, DNT.
If I
just
chip
want to
in,
say,
go on,
go
sir.
ahead, David.
No, you please.
Okay. Always the gentleman.
It's okay.
I just say I love this trade. This looks like one of my cam trades. Like I'm looking at that and I'm seeing you got your level identified. Like I would have my level identified. I use Spot Gamma. I need to get these notes on here for ES and NQ. I like that. I keep forgetting to add that, but I mean, it hit your level. That would have been my cam right up there. I've got targets. This is a beautiful head and shoulders pattern. You even had the lower high come up there and break through that liquidity. It didn't quite make it. You get in your entry and the retest of that liquidity and the hold. I love it. This is beautiful.
Yeah, great trade. And the phrase I've used before, Bruce, and everyone regarding the options level, and I think Brent occasionally repeats it, is that I just don't want to pick a fight with the gorilla. So, as you rightly say, John, it's you want the tide behind you. You want to be swimming with it rather than against it. So it's and the levels, Bruce, that we've had on the charts for years now. You know, when spot gamma first started out, to me they're the black ice warnings. There can be a trade from them, two into them, from them, etc. Sometimes they're quite sanguine, nothing happens, but most of the time something is going to happen. And what John's got here on the first chart you were showing, which I think is the wider sort of picture, it's that dog walk. Hey, nice post, Alan. It's that dog walk. The price scooted off on the London Open. It goes up. There's various bits going on, as you're rightly pointing out, in terms of higher lows, lower highs, and all the other things going on at the top there. So we fail. The lower liquidity was there from the London Open or pre-London Open. It may have been there, can't see it on the chart, maybe the European Open. So it's back to the stuff Scott talks about, other people will talk about. The signal is out there in terms of the likely dog walks away from home, and then it walks back. And that's a typical London move, whether it's up or it's down, as John will see every day as well. So, yeah, great trading.
Thanks.
I was gonna say this top down approach, like there's so many different like approaches to kind of like look at from a top down perspective.
Yeah.
This is just one of them. I use spot gamma, and I found it really helpful as well. What was I gonna say about it though? I forgot. Anyways, there's so many different ways to look at it. So what everybody was saying, noting my errors, what John was saying, noting what works for you, noting your errors has all helped. Noting my errors has been something that has been new that I introduced recently. That actually kind of might have pushed me over the edge. Like really helpful. You look back and you see your errors and you actually note them instead of avoiding them. Don't avoid them. Look at them and look at what you're doing and write down and feel it. Feel how embarrassing it is. And try not to do it again the next day. And then when you wake up the next day, go back and look at that. It's like a visualization thing and be like, I don't want to do that again. Or you make a good trade and I do want to do that again. And then, make those notes and then refer to them the next day, and it might help. And then another thing. Hold on. Can you hear me?
You're back, sir. Yeah.
Okay. Oh, the NQ. I was going to mention the NQ. Man, the NQ, I don't know, but I've heard from so many professional traders that I don't hear any professional traders really trading the NQ. I've never really heard any. I trade it too, but I do notice a lot of times I'll lose more money than I'll make a lot of money. Don't get me wrong on the NQ, but then you'll lose a lot too, and it's it's a tough one. So I second your what you said about it before, and I hear that same thing from everybody. And I mean, John is a good example here. It's on the ES, even if it's like slow or moving slow. Sometimes you'll want to be tempted to go to the NQ. I don't know if you do that, John or David.
It's just not my market. No, sir.
No, I hear that from all professionals.
I am trading it at the moment mostly in terms of I've got a bit less screen time, so I'm just trying to be a little bit greedy. But I know in the week, was it this week or last week, John, someone was asking you about NQ because I think I had posted someone up, or Jack had put something up, and you were, no, I don't go near that. No, rightly so.
I trade it quite a bit, and that's just it just responds well to cams. So my trading style, but it's, if you're looking at the ES and then you go over to look at the NQ, like it's just crazy. The swings are wild, and this is when you really got to start looking left on your chart and looking at higher time frames and being aware of, like you can see on this trade here, how we have these swing high areas. We have great absorption into that level, then we get another break through it, a little less buying. It gets to the top, we get some exhaustion, and the selling just starts to take over after that new lower high. And it just swings so much wider. It doesn't really respect sometimes like the level to the spot. You got to give it a little bit of room.
Yep.
But when it moves, man, it moves. It's fun.
Yeah, it's just not something really that you want to really be I don't know, vetting, like I don't know how you would put it, like starting with or trying to figure out
It reminds
first.
me a lot of Tesla and how the swings are just crazy and wild on Tesla. And I struggle. I do really well on it sometimes when it's reacting to my trading style, and then other times I don't do any. I can't get a trade on it. It just frustrates me. It's just because the swings are so wild and getting stopped out, then getting the move, and I'm like, okay, So the NQ is a lot like that. It's not like Apple or Amazon where it's got nice slow fluid movement, and newer traders can watch those and instead. And the ES is a good one to watch too.
Stan,
Stan,
any questions or any feedback? You've been kind of quiet.
No. It's perfect. I'm listening. There is a lot of good information.
Okay. I mean, you're very, very good with your feedback. So.
That's perfect.
John, something again here caught my ear, a subtlety, and I wanted to ask you in a little more detail. So, we always hear about like what DNT had mentioned, go back and what did I do wrong? But you didn't do that. You're going back and it's more of a positive feedback. What did I do right? And did you maybe just elaborate a little bit more? Did you kind of like find out well, it works better for me if I know what I'm doing right and I don't care about what I'm doing wrong? How did you? Because I've heard that before, but very rarely. Most of it's kind of negative feedback. Like I did that wrong. I'm not doing that again.
Well, I considered both, but in this instance, I'm very pleased with it. So I don't have anything. I would turn the page on this and say, "Good trade, well done. You took a little bit early, but you made a profit." And that's what I like to do for each trade, and that's what I like to do for the day. I had a trading plan that starts with the spot gamma levels. I look for hero to give me some direction in terms of order flow, and then I execute. And my best days are when I can look at what I did, compare them to my trading plan, and be pleased with it, and be able to close the book on the day. And it doesn't matter what the P&L was. The dollars will be there, and there'll be more of them than you think if you have a good trading plan and you execute well. And so, of course, it wasn't always like this. I was always picking the things apart, and that's why that three-part system worked, because I was able to pull out some of the things that were negative and some of the things that just simply weren't helping. And that also allows me to look at new things. Like right now, I'm looking at market pulse volume imbalance, and it's not ready for real time. I'm not ready to put it in, but it looks interesting. And so that's how that process allows me to refine, what I do each day. But yeah, sometimes you make a silly mistake or you identify something that may not be working anymore. Right now, I feel pretty good about where I am in my process. But, that was over time, I got to that point where, and I'm sure something will stop working or something new will come up. And that's what's exciting about this business. I mean, Bookmap's always coming out with something new. And so it keeps you a student of the game, makes all of us a student of the game. And but that basic process, that's intact. That'll never go away. It's been there for forever. And so, yeah, I consider all things absolutely positive and negative. Sure.
Okay. Yeah. Right. Good to hear. Guys, I think we've gone over a couple hours now. Let's. I think we can maybe wrap it up here. Unless there's something else, John, that would in some of your imagery here. you wanted to go through.
Now, what I just described is a good example, and that's what I do. They're all the same. I'll bore you to tears if you go over some more of these charts on purpose. They're the same.
Yeah.
And that's a good indication as well.
Yeah. Oh, great to hear.
Yeah.
Guys, any last comments before we'll wrap it up here?
Great session,
appreciate
Bruce.
you bringing me on. This was fun. Yeah, I loved looking at that trade.
Mm.
Yeah, John, it looked like one of my trades. It looked beautiful.
Yeah.
So
Textbook.
Great.
You nailed it. Love
Great.
it.
Thanks.
Yeah, great stuff. That was great.
All right, guys. Well, yeah, thanks everybody. Hope you enjoyed it, enjoyed the session, and we'll try to go through more of maybe the competition stuff maybe next week if we get to it. But there's been some good stuff. There's still like an hour left, I believe, hour or two left maybe before it ends. So you guys want to put your 100 lot on and just kidding. But anyway, yeah, thank you all very much for coming up and on the stage. Thanks, coaches, and thank you guys for all the great content. We got something real nice here, I think.
Definitely agreed. Great. Take care, everyone. Nice weekend, and those aren't feeling too well, hopefully feel a bit better soon.
Yeah, happy Halloween.
And that too. Yeah, great shout.
We don't do much. We'll just watch scary movies tonight. Hang out. All right, guys. Have a good one.
Okay.
Definitely.
Bye-bye.
Cheers, everyone. Take care.
Bye-bye.